Everyone. Welcome to another video from RTA Trading. This is where we get into the facts and info of what it takes to be truly successful without any hype of the flash. So real simple, what we're going to do here in this video today is just run through a review of the weekend and stocks that people were interested in based upon what my requests were from Twitter, YouTube, and Reddit, as well as through the newsletter and email. So we're just going to jump right into it. The first one here is GME, and I'm going to show you how I got here. We're going to remove all these segment lines, and let's get rid of all these moving averages to start. So really what you see here was the last time that we looked at this was down here. We had this little wedge, and we talked about this one on Twitter, and then it looked like it could go. And it did, and we were very fortunate with the trade. Now, you have this longer term downward trend right here. But you have this falling wedge right here. Now, what you do with these lines is you always clone them. Always. It's not really a debate. And they should fit in there, and that's how you know you have a true channel. And now you can see how that channel fits perfectly. So at this point, we really don't have a trade. We went to the top of this channel, we rejected, and this channel was set by the trajectory of these two lines. And you can see how we really, there's no edge here. And you're rejecting that 212 level again, which was an issue for us here off of this trade. And then it finally flipped. So what we really need to see is we need to see a break out of this and then push. Now, after you look at price, you can throw in some of the bells and whistles, and you can see that the 5 and the 8 are really not telling you anything. So we'll just pop those out real quick. And you can see right here, the 50-day is now being respected. And that's a good sign that the 50-day is being respected. And you have some support in here, but not a lot. And the 21-day is also being respected. So this is a case where, bulls still look to be in charge of this. We just need to get through the upper line here, and then we'll probably push to this line and retest here. So, I don't want to get into the fundamentals of the company because it's for what we're talking about here, it's completely irrelevant. So you can see this right here a little more clearly on the hourly, and I just want to draw it real quickly before we move on to the next one. This is the line that you're looking for the break, and we can get rid of these. We don't need them. And you can see right here, right? So what we're looking for is we're looking for this flip. And what would get you that flip, these two convergences right here, 212. If you don't want to wait for 212 before the flip from 180, that's on you and how you're going to trade. But you're going to have to drill down into like 15-minute charts to find something. And then, of course, the lower that you go on the charts on the time frame, the less accuracy. So just consider that as well. But right here, this is something that I would just wait until it forms what it's going to do. So let's move on to the next one. As always, consider subscribing to the channel and clicking notifications because what we go over is very timely. And if you're looking at it a week or a couple days later, it just doesn't usually have the same value, as the best way to put it. So overlaying all these, you just keep going down. Now we've broken out of the channel. 1, 2, 3 days we're out of the channel. Usually if you break a channel, you want to pop back in it within 3 days. If you don't, it might not really be considered a true, return to the channel, and you may be going through a basing period. See how you rejected here, and then you closed over it? It didn't even make it a day. Now I have 1, 2, 3. And this is usually what we would call like the peak. You get added to the S&P, and then usually that's pretty much the end of it. And now it just will trade like an index and start bouncing around and basing, and that might be what starts to happen to this now. So what we're seeing here is you're just seeing this just break, and we're below the 50-day, we're below the 21-day. So we can get rid of the 5 and the 8 because they're not doing us any favors. It's not really adding value, but you can see how this 21-day and this are going to cross. Now throw the 5 into it, and the 5 has crossed the 20. A lot of people will look at this and just get out of the stock when this happens. The 5 coming down and crossing through the 20. They'll just get out of the way because they know that this is leading towards more pain, or they think it is based upon that little trigger. Right here, there's just nothing to do. If you're in it, you're in it. If it broke the 50-day, I personally would have been out of it already. Also the way that it's just rejected from here. Once you rejected up here and you flipped back into the channel, you knew that you were probably going to go back to this 21 level. Now, you look like you came down far pretty fast here, right? So, what do we do? 30% in a week and a half. So what you could look at now is if you're looking for a bounce, you could overlay bands with it. And but the bands will show you, right? So like the band is, this is the lower band. This is a second standard deviation move. So when you're down here, you could flip to this level. You could flip to 117. So there's a possible trade here. I just don't think it's worth the risk because you're at 106 to 117, so 11 points. I mean, where's your stop going to be? The bottom of this, 96. So I'm risking 7 to make, 10. It's not even 2 to 1. So that's not really something that I would jump into here. Let it settle and develop. So DK, well, here we go, DraftKings. So DraftKings does what it always does, right? It breaks out and makes you think that this is the time it's really going to go, like it did here again and again, and just lure us in. And what did it do? Let's get rid of this 5-day for a moment and get rid of all these and just look at price. So we did not break this downtrend. You need to be above this 64.19 before you even consider buying it. If not, we're probably going to go to this level. And if you just look at just the general trend by throwing in the 21-day, right? And sometimes it helps to add levels in as you're looking at these stocks instead of just having them all in at once. It tells more of a story. It's cleaner, right? Instead of having like 5 lines in here right now, you can just read this a little cleaner. So we opened at the 21 and just rejected. And whether you use the 20 or the 21 or an EMA or an SMA, it's irrelevant. If you're worried about that, you're splitting hairs. Use what you're comfortable with and what works for you. It's very simple. One day on a 20-day moving average is not going to affect you that much. So what you're seeing here is you're just seeing a clear rejection of that level. And then you should probably come back down to here, not just overlay a couple more with them and see if they tell a better story. And it does, right? Okay, so the 50 is not breaking. Have we closed below the 50? Yes, once. What transpired when we did? We tested this and bounced. Okay, so this would lead me to believe that at this level, you could look at adding, if it consolidates for a while and you get a higher high, and then just using this as your stop. But right now, I would not do anything with it until at least I'm above 64.20, and I'd really like to see it above that 21-day again. It just looks like it's getting ready to just sit there for a while. API, let's change the properties of this. And we'll lock this on, and we'll click it here. So, here's your moving averages. I mean, they're telling you a pretty clear story. You don't have a 200-day yet on this, right? We broke here, ran to the top of this, clear rejection on the breakout that just added to massive pain. Now you're below the 21 and you're below the 50 and they're rolling, and throw the 5 and the 8 in. So they're crossing down too, and now the 8, and let's get rid of this so that you can see what I'm talking about. The 8 is now resistance. And you do have an undercut here, so there is a possibility of a double bottom forming on this API. See how you undercut this and then bounced through it, opened, came down, and then closed above it? So you could be forming a bottom here. Now, there's a couple other key levels by looking at this that you can see right here, right? So I would wait until you're above one of these, like something along this lines, like wait till you're above this and see some movement. And then you would be looking at this as saying this is your stop. I mean, this is a pretty drastic drop in such a short period of time. So you could see this start to base, which is what it should do. Form a base between here and probably one of these moving averages, the 50 or 21, before it tries to get itself higher. But this definitely needs rest, but you might be bottoming here on that. The XLE was one we talked about in the newsletter. And if you don't get the newsletter, it is free, and there's a link in the description and bio, and it comes out 3 times a week. Let's just put this here for a minute. This is in the newsletter where I said we were looking toppy. You run right into this, the top of this index, and there's some really big support lines here, and I threw this in on the weekly. So let's get rid of these lines for a minute so we can focus. So you can see here how we broke the downward trend line, but when you start overlaying energy and what's truly going on, there's your monthly chart on energy. Okay, you went right to this point, this 54 level, and rejected this huge resistance. Bonk, bonk, bonk. I mean, this is where resistance is. It's very clear. So until you flip this 54.60, so you could say 55 level, you're still in a downtrend. And you're in a downtrend until you break this. You're in a multi-year, 6-7 year downtrend until this is broken. So any long-term play on this is not something that you should consider. Now you do, let's get rid of this, and you do have this trend here, right, on a much shorter time frame, and you should be able to see this pretty clearly, and how you're responding to this 48 level, and that is becoming support has flipped to resistance. So you could be on the lower end of the channel, and you can see how the trajectory of these are pretty much the same. They're actually exact looking at them. So what does that do for me? It means that here's my channel. I've found support. There's a chance that I'm going to bounce to this level, which would get me to 56. And you'd want to play, to me, I would want to play the stocks versus the index because, you know, a 10% move and this could lead to a 20-25% move in the stocks versus trading the XLE. But break above 21, get above 21, get the bulls back in charge, and then you could probably re-challenge this 56. They would be the key levels I'd be looking at on the XLE if I was looking to trade it. Real estate, you know, look, when these things look like they're about to break out is usually when they roll, right? If you look at what's transpiring here, these are some key levels for you. You just keep basing and basing and basing. Now, what's nice about this is you finally broke above with the low being the 39.11, and you could see it start to roll up. But when you start looking at things like this, you have to realize that, you know, these indexes, they could just base for a while. And this, the one good thing that you're seeing here is you see how these are starting to point up. That's what you want to see. See how this is curling up and this is curling up? That means that you could be setting up for a move here. I would personally like to see it break above something like a 42. And I would be looking at individual names again because this is really going to go nowhere to make any real money. And you can also overlay and look at the weekly and see what's going on there. I mean, you can just see this just bases and then it has a little bit of a move, bases a little bit of a move. But you are curling and these averages are pointing up. So, you know, you could look at what's in the real estate index and then find individual names and drill down. That's how I would play this. It's definitely curling up and it's definitely breaking out of this base. There's no question about it. So plug, looks like I got a couple of these. Let's remove this one. Let's throw this one here and let's click on here. And for people that ask, because I usually get questions about this, the program I'm using is TrendSpider, and there's a link in the descriptions, and they give you a 7-day free trial. I just like it specifically because of the automation features. It's easy for beginners to use, and also it's web-based, so I can use it on any of my computers. So you see this range right here? Like, this is just nasty stuff. And if we overlay even more in there, you can just see it. So when you see moves like this that are down, like here, I like this feature a lot because it really hammers some things home. I'm down 60% in 5 weeks, right? So when I have drops like this, I just like doing this. And this is really when I use Bollinger Bands the most, is just to understand where I am, right? And this is just a weekly, but let's go to a daily and drill down into this a little bit more because that's a pretty big move. So there's my major support level, and look at what's going on there with it, right? Look at that major support and what's going on. It's now flipped to resistance. This little rising wedge has broken. So this is not the best. And I cover this in the Bollinger Band. I'm going to do like a trade like the Pro Series for people to understand how to use these indicators. You know, just because you're hitting this line on the downside does not mean that you buy it. It could just ride this the whole way down. You know, stocks will do that. They'll just ride this line and then they'll bounce up, never getting here. So this is you need to be really careful here. Breaking this major support, even though we're on the low end of this is telling me we're going lower. Now let's throw out the Bollinger Bands and let's get into it. So yeah, the 21-day is now coming down. The 50's pointing down. I've broken major support. I mean, there's no reason to go near this. This is your last bastion right here, is your moving average, your 200-day moving average. This is the bull's last stand, 200-day moving average. Just, maybe write that down and remember it. But if you don't know that. But you can see this trend here, right? But this is just nasty stuff. And you really are having just gaps down. Like there was a gap here that kind of filled, and then you gapped again. So here's an island gap, even though it's one bar, right? That's still an island gap, followed by a rising wedge that then broke to the downside again on a frozen rope pattern. Like you don't need to run in here, and say what? This is support? There's nothing there. You really need to get to this level. You have to let this thing build and figure out what it wants to be when it grows up, because it's just not there yet. VIPS I was asked about. Yep, I got the idea that it bounced here off of this moving average and then came back up. This is one that most likely has bottomed, and I would say that because of the action we saw the other day. And look how much we came through this Bollinger Band. Like literally, these are second standard deviation moves. They just don't happen that often, right? You went right to this and found some buyers. Now, is this move over? I don't know. Sometimes they break and they rally right back up, but the reversion to the mean is in effect. So what you're really looking for is a break above this, maybe even the 50-day, and then it running to this 21-day, which is also, or the 20-day, which is also the mean line of this move. This is pretty nasty stuff. So you're going to have to just watch it here and see how this transpires. But I do like this. I do like this from the standpoint of this one does look like it's bottomed with all the volume that came in that day. I mean, it was just staggering, the people that were looking at trying to get in this. And this is why you use stops, right? I mean, if you didn't use a stop, you just lost months and months of gains. So CCL, I mean, look, they got bad news with the CDC and what they said, just dragging everything out. And we can get rid of these for a little bit and throw this in. And look, you have a rising wedge here. And then you broke that rising wedge. And then you're trying to get back into it and you reject it again. And you have these key levels here that are trying to hold, but they're not. And you really can't even get back to where you were when we broke. This is not something that I need to be in. Here's your lower trend line where you're trying to become, you're trying to become a major player again. And the 50-day was respected, the 21 you're in between. So I don't see any reason to run into this right now. Like I just don't see it. I mean, to me, it's going to trade between 27 to 31, 32 for a while. These plays probably are more in your June cycle, is what I think. I wouldn't be rush into them, especially with tax season. People are going to be blowing out of them to take their tax losses to offset gains. But just technically speaking, it's not something I would go near. We undercut this, and everyone keeps waiting for this one to move. I'm constantly asked about it. Let's just move this down so you can see the number. 22.56. You're right here. You hit it again. You failed. You closed right on it. This was your major downward trend, and you broke it, and then you rallied, and now you're just riding it all the way down. There's nothing to do here. We're not above the 50. We're not above the 21. Let's look at the 5 and the 8, and you're not even above those. There is no signs of life here. What if you had a double bottom where like you had this point and you jam down on this, then I would say take a look at it. But you haven't even had that. So you don't even have a true double bottom yet. So I wouldn't go near it. TME, this is another one where when I started running these charts on Friday, this was another one that I really liked. Like this may be over. The selling of this one might be done. The fact that we opened on right here on the 200-day and then went up is pretty telling. Even though you came back down and rejected, you're starting to see a bottom here, and this one didn't get hit as much. So this leads me to believe that we could really bounce back to the mean. And if you overlay the bands with it, you can see how you broke and then you can't pop back into it. Technically, if you want to play the bands, and I go through that in that Bollinger Band trade like a pro series, you got to bounce into the band. If you're not in the band yet, this is still a rejection line. And you can see, I mean, it's not a coincidence that it stopped there. So you need this to bounce into there, and then your goal would be this level, which actually gets you to 26.27. that 50-day and 21-day. So let's get rid of these bands for a second. And this is IMAX. Look, I think these theaters and the fact that people think theaters are over are somewhat delusional. I think that the theaters are going to come back, and I've been a big proponent of AMC, actually, and we'll get into that one. But, this gap down would concern me. The 50-day closes would concern me. The rolling 21 would concern me. You see this 5-8 moving average crossover? That's not something that you really want to play with, considering how we're respecting it. So there's not really anything here that gets me warm and fuzzy. And you even broke your lower trend right here. And you can't get above it. You actually opened on it and then rejected it, which is nasty stuff. It's not something you want to go near. So before I would even look at this, close above the 50, which would also get you above the 5 and the 8, and you're still going to have this as an issue, the 21. So this has to develop a little bit more. Ethereum, well, let's just get into it. We got stopped out for, it wasn't a $12 loss, it was a $1.25 loss. We got stopped out of this. I thought we were going to run. We broke out here. Looked like we were going to push. I think we bought it at 17. We were up for a little bit, but it just rejected and rolled. And now you have this other support or trend line right here. Let's draw the new one because this is pretty clear to everybody, it looks like, right? So again, you got to be over 1750. That would get you above your moving averages and get you above a key support level of 1723 over here. Flip that to resistance and then go from there. And I thought that would be on here. There it is. E, so people can see it. There you go. What is this? SFTW looks like a request. So SFTW, I mean, it's obviously a thin stock that ran up pretty substantially and then collapsed. The only thing this has going for it is the 5 and the 8 day are starting to point up. You broke this little trend line right here, and you opened right above it, which is perfect. It's actually perfect for a trade, right? See how you opened right there? See why it's so important to just look at price, just take a step back and look at price sometimes? So you opened right on that line. That's pretty substantial. It was a low of the day. The volume was awful. This is not something that I would play because there's too much overhead resistance for people that are just going to be looking for a way out of it that haven't been able to get out of it yet. So I wouldn't play this. But if I was hell-bent on it and really wanted to be in it, you flip back into this channel, and that's your stop. It's a very simple trade. You don't even need moving averages. But if you flip back into this channel, break this low of the day, that's your stop. So, I mean, literally that would give you a 70 cent, from where you close, it would give you a 70 cent stop. Not even. I mean, you'd really be at like 10 and a quarter. So it's a 50 cent stop on it if you really want to be in it. But this is not something I feel the need you have to jump into right away. This is ALTU. So here we go. So ALTU. I mean, again, this is not, I don't see the reason to jump in this. You're just consolidating, and now you close right here on this level, right? So you at least have to get above this. If somebody's like, thinks there's a reason to be in this, you at least have to get above that line. And if you can't close above that, see how you closed right here? There's no need to be in this. So let's get this going here. So this is AMC. People probably know this by heart at this point. And let's go here and go to the, well, that's not right. Clicked on a UFC match by mistake. Let's just keep rolling. So what you're going to see here is you're going to see that, oh, this is the wrong one. Hold on. Got thrown off here for a minute. Let's get back on track. There we go. Okay. Let's consolidate this down. Let's look at what's going on here. And we have way too many lines on this chart. So what we're going to do is we're going to remove everything. And we're going to start over. Okay, you can just see there's just too much going on here. So if you were to look at this, see 11's an issue, right? This is your high when everyone thought it was the next, GameStop, and it's not the next GameStop. But you see this line under here too. Like, look at this little trend right here, right? You can see how it respects that essentially. See how it's respecting it? So these are some key levels to look at right now that we have to get through and we're having issues with. When we looked at this on the weekly, this was the level that was very important that I thought you really needed to focus on. And let's get to that because I think that this was really, really pertinent when you saw it. So this 771 level I was a big proponent of, and you can see it goes all the way back here, and I can actually draw it to here just for the heck of it. Probably changes by a penny, yeah. So you can see how we tried it here, didn't break here. Once we hit here, didn't close above it. See how it flips to support on the weekly? So this is your support. This is major support now. Resistance has flipped. So that line is really what you have to watch. Now, for that, you'll just start seeing other levels will start becoming into effect. And the question becomes, people will always ask, well, why is that an important level? Okay, we have not had a shoulder where we've broken above for years, right? You haven't seen it. Here's one, here's one, here's one. Okay, this is going back to 18. So from there, you have not had this. So in three and a half years, you have not seen this. So now that when you start to see it, it becomes significant. And you can see how this 1249, there's a reason that's the high. There's a reason it's not holding it. This is a resistance point. Now you have a nice channel that's forming here, but really between here and here, I just have a huge weekly bull flag. And this could consolidate for weeks before it goes higher. But I don't think it's going to roll again anytime soon. I truly don't. Now, if you look at the moving averages, the 5 and the 8 are telling you to expect short-term pressure, but the 21, it just broke. So you're going to have to watch that level. And that might take it back down. That could take it back down to $8, $9 and see if the 50-day holds. And if not, then you're going to come back to the 771. So you are in jeopardy here of rolling and testing this level. You need to flip back over 11 and push higher. FIII, I think we're going to start seeing a lot of these SPACs and broken names. The one thing I would tell you about playing these kinds of names, when you start looking for like what SPACs are broken, just take this as advice as someone that's been doing this for 20 years. It doesn't mean that they're not coming back. It just means that they are going to take the longest time to come back. People are not going to run out there for new companies. Institutions do not put money in new companies right away. When they go through a correction, they wait and they see who's going to win, and then they're going to pay up. I wouldn't go near this until it breaks this 21-day, and I don't know the fundamentals of it, but the fact that we have not undercut this line means that my bottom most likely is not in. So this is not one that I would run into right now. ZKIN, we actually covered in that NFT video about a week ago, and people did fairly well with that video, actually. There it is. It's already in here. There we are. So what you can see, you have all these different support levels here, and we're going to get rid of this one. So what's really going on here is these are out from like a week. And we'll go to the weekly, just view this so you can see what I'm talking about here. So this is back right here, and it is substantial because this is where people are actually in it. And you can see this move within a week, right? It was just staggering. So rejection, it's very clear 1285 is major resistance for this stock. Whoever has been in up here has been waiting to get out, and they're using this. If you flip 1285, this thing probably takes off. That's a key level that you need to look at. And right now I have nothing. I have an inside week. I don't have anything, that really convinces me that I got to jump in here right now. I have a position in this from longer, a while ago, and I'm just sitting with it. I don't see any reason to sell that position. I've got a nice trend here, and let it consolidate and then maybe rip higher. But until I break this line, I won't go anywhere with it. I'll just sit and watch and wait. But this, do I add here? No, I don't see any reason for you to be adding to this at this point. It just doesn't make any sense. There's nothing that's telling you that you have to trigger on this one. XL, I want to just say this without trying to figure out the right way to say it. I think you need to be really careful of when you're in these and understanding what you own. So if you're not trading technically and you're trading fundamentally because you heard a good story, the story didn't change from here to here. What changed were the technicals. Now, the only thing that this has going for it, the only thing is that you undercut this 950. I mean, that's it. And now you have to hold that 950. If you break 950, it's going lower. And how you would calculate where that next move would be is just take this angle, which would be this 14 level, to 9.5, and you can count 5.5 points roughly of pain there. So this thing can go to $4 or $5. If you think it can't, you're wrong. I mean, it's happened before. People always say, well, how low can they go? They can go to zero. There have been times in the industry where $100 billion companies have gone to zero. To think that it's not going to happen to your stock is not a plan, it's a dream. So I'd rather just be honest with people so they understand this. These things, when they blow up, they blow up. Not every SPAC is going to 100. So, there are good companies out there and there are bad companies, and I'm not going to get into the fundamentals. I'll leave that for other people. So JFIN was in that NFT letter, or video rather, and you can just see lower high, lower high, lower high, lower high. At least we got an inside day here. So maybe we'll get some support. Now, what I do like is that higher low, higher low, higher low, higher low. So I'm doing what here, right? What's it called? My volatility is contracting. See that? So the volatility has been contracting. Each one of these bars is less than this one. So I'm getting ready for a move here. Now with this inside bar, what would I be looking for? If I break above this level, I could push up to 13, 14 bucks. So I'll say that again. If I break above this, I could push to that level. And let's just throw in some bells and whistles. Okay, you can see how we are over these, so they're not really going to be good guides. Okay, this is telling you exactly where you're heading. So if you flip up through this would be the next thing to worry about, would be up here 1060 and see if you push. But I like this, and I would put this on my radar. The consolidation in the smaller bars and the fact that you're not taking out lower bars leads me to believe that there's something going on here. Like, let's just look at the difference. See how this is just taken out, this took out this bar, this took out this bar. Even though I'm in this one, I'm just pointing out the faults of it. It's always good to be objective. So that's one that I would definitely be on my radar, JFIN. I'm going to just change this out real quick. And then you can see here, you're just rolling. I mean, it's just, there's no need to go near this. I have a rising wedge right here that's nasty. You better hold this, because if you don't hold this, and you see how this 21 is now resistance, this could just flip down and go right back and test this and undercut to $5. So this is not something I would run into right now. You can see this rolling. I do expect that you're going to see a lot more blow-ups in these smaller cap names, just the way that the trading's based. And they just ran way too fast. So you can see this line right here. You're holding the 21 on this SLGG. I have an inside day, really, another inside day, and we should push to this 10, 11 level. This 5-8 crossover's got me concerned. It's real simple. This is your stop, 650. You close below this, it's time to go. You can see how it's been respecting that, and this upper level is really going to be your next resistance after that. I need some kind of trigger here. What would that trigger be? For me, it would be breaking this 871 level, and let me just go through this. And I know I talk fast because I'm trying to cover a lot for everybody. So some people actually take notes. 867 really is the level you have to look at there. And I'd want to see volume, like sick volume. This CX we've been talking about, like, look, I know people are looking at this and trying to play the cement move on, to try to play the cement move on this infrastructure bill. I mean, it's very clear that this 50 days being respected, and you're going to see people buy it based upon that. I don't think you have to jump into this anytime soon. Like it's out of the channel. It can't get back in. It's got to go down to this major one and probably retest. And I just don't think that this is going to have the same kind of move that the X is going to have U.S. Steel that we put in the newsletter. What would I want to see? I'd want to see a flip back into this channel to that 710 level, and then I could get to probably the $8 and go from there. All right, MAC. I mean, you can't get above any level, right? And you're just rolling. Now, the one thing that it has is this. This is the very first sign that you might be bottoming. You undercut it, and you opened and closed above it. So you undercut it. So this, if you were going to hold, this is where you hold. If you break this, $6, that's your stop now. And these are starting to go sideways and point, well, this one's pointing up, but they are starting to go sideways. So that might mean that we are set for a bottom. I wouldn't add till I would be over this 50-day. And the only reason I'm going to pick the 50-day here is because I want to get over this higher high right here, and I might as well just use the 50-day. Get over everything before I add money to it. CLVS is broken. We rallied up. You can see the $7. We can't get over that 7, right? The $8 line right here. It's actually 8. I apologize. Here's your 7 right here, and that's your 50-day. And now I'm trapped between the 50 above and the 21 below and the 200 here. I mean, where you need to get out of this completely is going to be if you close below the $6 level. UEPS. Okay. UEPS. I mean, you're just basing here. So you're not really doing anything yet. I'm not really sure what this company does, and for our purposes, it really doesn't matter. So what you're seeing here is you're just seeing consolidation. I don't see anything here that's negative or positive. I just got to get above this 574 level, and I need to see huge volume when that happens. So RES, this is interesting. You see the difference between this and the other one? See the difference in how we're turning and how we're breaking levels? See how we undercut and formed the double bottom? And guys, if you are looking at this and you get frustrated that you don't see this stuff, just, I'm saying this for the point of reference. I've been doing this over 20 years. So you start seeing these things and these patterns a lot sooner. So my recommendation is to go through tons of charts every single day just to build your skill up and ask questions. As always, please comment so that I can decide which way these tutorials and reviews should go. Please comment on YouTube about that. So you're above the 50-day, boom, right? The 5 and the 8 are going to cross. So that could push me to this level. I undercut this. So this low now, 479 would be my stop. I'd want to see more volume come in. But I like this trade because at least it gets me ahead so that I could put my stop in a decent spot. SNDL, I know you guys love this stock. I get so many requests for this stock. I don't know if it's like hot on Reddit or what it is, but this thing just looks nasty. Like, let's just get rid of this for a moment. Okay. I click remove. Let me get rid of all these lines, all these horizontal lines. Okay. Let's just turn the indicators off. Okay. Like, I can't hold anything. I can't hold lower trend lines that are broken. I can't even make a double bottom. There is no reason to go near this yet. None. I came out with excellent news with what they're doing in New York. The stock went down. So that tells you that there's just no demand for it. So that's it for stocks. And as I said at the end of it, that I would do Bitcoin, and I will, since I remembered. And let's rock and roll with this. So let's get rid of these indicators for a moment because this thing's really at a crossroads. So you have, and this is just Bitcoin for those that aren't. Let me just throw that in there. So you see where we're at? See what's going on? Like, you should be able to read this a little bit, right? So here's your upper trend, and you can't break it. Okay, I understand that it didn't hit here. It doesn't need to hit here. It needs to hit where it hits. I mean, it's really that simple. So here's the trajectory that we drew before because they matched. We're at this crossroads. Like this, you have to flip 58.5. Like I would not be a buyer of this until it flips that. If you reject here, people are going to call the ABC and do the Elliott wave. I don't care what you call it. It doesn't matter. All that matters is price. I'm at the high end of a falling wedge. Chances are that it's going to come back down to here and retest the way that this is setting up. We don't know that. We don't know what's going to happen yet, but I would not be a buyer of this until it breaks 58, because if it does break there, now I have my trigger, and it probably pushes to 70 and takes out new highs. So 58.5 leads to probably, a 7, there, and I think that that's very realistic on this. I don't think that this is going away. I just don't think people understand the volatility that's going to be associated with it. And you can see how it's not respecting the 21. It can't get above it, and the 50 is support now. And that's probably where institutions are starting to take a stab at it, because they can't get in trouble buying on the 50-day with the other portfolio managers or whoever's at the C level of those institutions. So that's it in a nutshell. As always, please comment. Please like this video if you find value in it, because I'm trying to get in front of as many people as possible to show them what it truly takes to be consistent and profitable. There's a lot of nonsense out there, and I'm trying to cut through all the crap. That's it. Enjoy your Sunday.